Call the meeting for Wednesday, February 8th to order. Hopefully we have some members that are on their way, just running a little bit behind, but I think we have a pretty full day, so we need to get going. We'll start off with Senator Dietrich. Do you have some guests in the audience today?
Thank you, Mr. Chairman. I do. I have 4 sixth graders with me today. Will you want to stand up so we can see you? I have Brody, Ethan, Thomas, and Prajeet. They're from Indian Hills and J. Scheidler Elementary Schools here in Topeka, and they're with me today, learning a lot about government.
Welcome. Okay, committee, we will now open the hearing on Senate Bill 34, which is expanding the use and the availability of rural housing incentive districts. Eileen, you want to give us an overview?
Thank you, Mr. Chair, members of the committee. Senate Bill 34 would expand the Kansas Rural Housing Incentive District Act to allow for certain housing projects in cities with a population exceeding 60,000 persons. Generally, the act allows cities with a population of under 60,000 persons to establish rural housing incentive districts for the purpose of encouraging the building of housing in rural areas. A city that establishes such a district may then issue special obligation bonds to finance the infrastructure development for additional housing within the district. The bonds are paid for from the increased property tax revenues resulting from the increased property valuation. In 2022, the act was amended to allow the city of Topeka exercise powers under the act and to allow bond proceeds to be used for the renovation of existing residential structures that were at least 25 years old. Senate Bill 34 would establish a new statute within the act applicable solely to cities with a population of 60,000 or more. Housing projects in a district established under the new statute would be limited as follows. First, the city could only designate up to 100 residential units as for sale units in a year with not more than 50 such units designated for any one project. Second, the city could only designate up to 100 residential units as for rent units in a year with not more than 50 such units designated for any one project. And lastly, the average size of a residential unit could not exceed 1,650 square feet, excluding any garage and exterior areas such as porches or patios, etc. Senate Bill 34 would expand the lists of costs that may be paid for from the bond proceeds. The bill would allow bond proceeds to be used for the residential renovation or construction of residential dwellings if either one, the infrastructure for such development such as streets, sewers, water, and utilities has been in existence for at least 10 years, or two, the lots on which the residential units are located has been subject to an improvement district tax assessment because the land is located in an improvement district already established by a city or county. And if enacted, Senate Bill 34 would become effective on July 1st of this year. With that, Mr. Chair, I can stand for questions.
Thank you, Eileen. Committee, are there questions? See none. We will now turn our attention to the proponents. First up is Senator Rob Olson.
Thank you, Mr. Chairman, Vice Chairman Fagg, and Ranking Pittman. How this bill really come about was we know there's a shortage of affordable housing in places like Olathe, Overland Park, the bigger cities. We had a really nice bill last year, did a lot for the rural housing. So we started looking. And one of the reasons, like we put the 1,650 square feet number in, we were looking at a dollar amount, but then how do you increase that with inflation or whatever? So we thought that 1,650 square feet represents a starter house. Also, we wanted no more than one developer to have more than 50 units of the project. And so, we wanted to allow up to 100 a year. So we were looking for them cities that don't qualify for the RHID. We're trying to give them an opportunity to be able to build some starter houses. We really need them bad in Olathe and Overland Park and places like that. Also, this bill, the second piece of it, and we met all summer talking about this is the vacant lots that are in the original RHID. When we were working on that last year, that kind of, we wanted to put that in, and then it got skipped. And so what we did was, in the bill, we added the vacant lots in the rural areas to where they can use the RHID for them vacant lots. I might suggest as we move forward even to add the vacant lots in Wyandotte County and Sedgwick County, because there's a lot of them, and this might be a tool to fix their problem. They've kind of come to me after we started the bill. So, this is just a tool, and you're going to hear from many people how this tool works. But it's a tool to get more affordable housing for, people at the bottom. And, so I'll stand for questions.
Thank you, Senator Olson. Are there questions? See none. Thank you. We will now turn our attention to Ross Vogel with Heartland Housing Partners. Ross, welcome.
Thank you, Senator Longvine. Senator Olson did a great job of covering what this legislation is about. On the non-rural, or the 7 communities that don't currently qualify for rural housing incentive district, we've been talking about rural housing in the State House and around the state for 15 years now, and we haven't talked a ton about the larger communities. They have not exactly the same, but very similar problems in housing, and this is a bill that would address that. And Senator Olson did a great job of speaking to that. I'll talk about the second part of the bill, which was always kind of on radar as Senator Olson and I started talking about housing. If you drive around most communities in Kansas, you'll see a lot of vacant lots. And those vacant lots are valued very low from a tax perspective. But in reality, if we have to replace those, it's very expensive to replace them. And that has especially become true over the last 18 months, where to go and build new lots, just hard cost is at least $50,000. No one's made any money or paid any soft costs or anything like that. So we have these lots sitting around, and really what this is, a market-driven build, is to indicate that to investors and builders that there are value in those lots if we have some type of incentive behind them, and they can go and be activated rather than spending $50,000 on brand new lots. So I hope that makes sense. I mentioned a market-driven bill. We're going to talk about Senate Bill 37 here in a minute. We've seen great success from bills passed last year that were very market-driven. This is market-driven, and I think will activate in a lot of places, like, for instance, Emporia, where maybe there's some infill lots that would be developed, but not because the economics don't quite work, and so they will with this bill.
Ross, thank you. Are there questions? I see none. Thank you. Allie Devine, on behalf of Kansas Farm Bureau, Kansas Corn Growers Association, and Sunflower Electric. Good morning,
Mr. Chairman, and Northwest Kansas Economic Innovation Center.
Absolutely.
We had if you were here last year, you heard us talk about rural housing. I have to tell you, we'll welcome all those communities listed as part of the rural America here if we want. But the only thing we would say is we support anything that includes and helps housing. We're very active last year about securing some rural housing funding. It's my understanding that changing the access to the RHID does not access that pot of MIH, I'm sorry for getting my acronyms, MIH funding. And I'm sure KHRC will confirm that. And with that, Mr. Chairman, we're supportive, and if we can help, we will. Thank you.
Well, thank you. Are there questions? Senator Warren? Allie, we have a question for you.
Thank you, Mr. Chair, and it's probably more a question for the reviser.
Perfect.
But hang on, Allie, I'm not sure. But thank you for the testimony today. My question is about new Section 1. So this is a new section that's not currently in the Kansas Rural Housing Incentive District Act. And it talks about designating not more than 100 units within such district for sale, and then not more than 50 units or not for sale or for rent. So if you're a private property owner and you're in one of these one of the 7 cities that would now be qualified should this bill pass, and you're doing a tear down and a rebuild, is that impacted by this proposed legislation, or would it not be?
I'm going to give a little disclaimer in protection of my revisor. She did not write this bill. And she did not write the brief on this bill, but from a legality standpoint, she may be able to answer, or Senator Olson may be able to answer.
Am I excused?
You are, Ally.
I believe you're going to have to apply with the city, so no, they wouldn't be. The single lots would not apply in Johnson County. The single lots would apply in the rural parts of the state or cities under 60,000. Inside the 100, you're going to have to make application with the city, and there has to be agreement. The theory of having, I thought 100 houses were a reasonable start. I don't know if we need to do more or something, but I thought, let's try this. And I also thought we don't want to have all our apples with one developer. I think we need to make sure that, we can have at least 2 developers, so no more than 50 in 1 year. So that doesn't stop them saying, over the next 3 years, we'll do 150, but 50 each year with this developer. I don't know if that answers it, but the application with the city, if they want to do a development of 1, I guess they could. But, I mean, they're going to probably want to do an application of 30 or 40 or 50. But they can do no more than 50 in 1 year with a developer, so.
Thanks for that clarification. And then just a follow-on question. So it is for a single project of 50 units, but you could, through the bill, have multiple single projects of 50 units throughout the area designated by this new act or this new bill. Is that right? So it could be several single projects.
As long as the total doesn't exceed 100.
In a year, in a calendar year.
Okay, because the district is defined as the Rural Housing Incentive District. Okay. Thanks for that clarification. Thank you. Thanks, Revisor, for clarifying that as well. So, yeah, thanks.
Senator Pittman.
This is probably over to Senator Olson. What can you just kind of help with the cap? Why are we putting the cap in? And 100 seems like good, but when you have a big city, like some of these big cities you're talking about, I don't know if it's a percentage or less than a percentage. What's the kind of idea there?
I get it. I want to pass this. I want to make sure it works. And I think if it works somewhere down the road, we might expand it, but I don't know that. Also, we got a pretty robust housing program going on up there, and I don't want to damage it with a bunch of cheap houses without taking the first step of kind of seeing what this does and see if, it might not have the developers that want to develop. One thing I do know, being in the banking side, the houses at the bottom tend to not be as profitable as the houses that are $750,000 or more. And so developers tend to want to build them $750,000 house because they're making a 15% margin versus a 5% or 4% margin on a smaller house. And so we're trying to give some incentives to get this started and see what that actual number is. But the way I look at it, we ought to do it for 2 or 3 years at this. That's 700 houses. That's 2,100 over a 3-year period. If it, year 2, year 3, it needs to be expanded, we can go there. But this is something we don't have now and gives us opportunity to move forward.
Okay, we will now hear from our last proponent, Wendy Stark, with research associate with the Kansas League of Municipalities. Wendy, welcome.
Good morning. Thank you, Mr. Chairman and members of the committee. I'm Wendy Stark with the League of Kansas Municipalities, and want to thank you for affording us the opportunity to provide testimony in support of this bill. One of the things that we hear from all of our cities, whether it's Frederick Population 8 or The city of Wichita, population 397,532, I believe, is that there is a problem with housing, and it is not just in one part of the state, it's across all of the state. What this bill does is allows what was passed last year, and thank you to the senator from Olathe for working very hard on a lot of housing bills that are helping our communities across the state. But this expands this program to cities over 60,000, as well as just providing more tools in that toolbox to help cities as they face their housing issues. And with that, I can stand for questions. Thank you so much.
Thank you, Wendy. Committee, are there questions? Senator Gossage? Okay. Oh, come on up, Mark.
I should be written only on 37, but in person for this one. But Chairman Longbein, members of the Senate Financial Institutions and Insurance Committee, thank you very much for hearing this bill. My name is Mark Toom. I'm the Vice President of Governmental Affairs for the Kansas Association of Realtors, and we're definitely been in support of the housing legislation that you've seen in recent years. Really appreciate the leadership of Senator Olson, and also looking out also for rural areas, but also for urban areas, which was missing in some of the bills last year. And we're supportive of additional tools in housing to create housing. There's a huge housing supply concern that's been ongoing. There's been a fundamental underbuilding for decades. And really about housing development in the current market is really a math problem. And that math problem is different in urban areas as it is in more rural areas. And so I think that this bill recognizes that increasing access to home ownership is a goal of realtors, and really it should be a goal of the state. And certainly when we're talking about all these economic development projects, trying to find homes for our future workforce is something that's very, very important to realtors and certainly to public policy makers. This legislation, with its focus on rural, by expanding it for vertical infrastructure, for vacant lots, it will be a game changer. And for urban areas, allowing the rural housing incentive districts for those above 60,000 in population will be a great start to provide affordable housing in those communities. And with that, I'll stand for questions at the appropriate time.
Thank you, Mark. I apologize for not having you on the right line. Questions? Senator Warren?
Thank you, Mr. Chair, and thank you, Mark, for your presentation this morning. And it's there's a need for housing, certainly, and the 7 cities that would now be qualified might not be as rural as some other areas of the state. Has there been any study with regard to if these developments were to be approved by governing bodies in the 7 cities that would now be qualified, any impact on existing home property values on existing homes in those 7 areas? Whether it would increase it, or how would that impact what we've got already?
Yes, absolutely. I think there's certainly a supply and demand issue here, so increasing the supply. And I think that the way that this is designed for an average square footage of 1,650, you're already targeting a more affordable market. So I think that having additional supply, and this will be a tool to bring that on board, I think it would be more affordable. And so it would provide more affordable options. So I think it would put downward pressure.
It would then increase nearby surrounding property values or not impact them at all, or
I think
do you have any input on that?
we have a huge need. We need more supply, bottom line. So I think that the impacts, there will be impacts to surrounding home prices, but the trajectory for home prices is still increasing.
Thank you for that information. Thank you, Mr. Chair.
Yeah, thank you, Mr. Chairman. Me and Mark met over the summer. He's one of the ones that kind of asked me to look at this. And I think he's dead on. I think, I'm in the real estate business. I've sold off a lot of my portfolio. I rent a lot of properties out. And I think what's missing is the bottom end, the affordable housing for the people at the bottom end. Used to be the rents I would get would be $900, $950 on a lot of my duplexes and that. I sold them off for twice the value to 3 times the value. and them things are gonna rent for $2,000 a month now, and there's no place, and that's what's happened across our county. The places for people to live at the bottom are just non-existent. And I was down getting rid of some limbs, and I was talking to one of the people that worked there, and they're like, yeah, me and my husband, we work for the city, but we got to live in Paola because we just can't afford to live here. The cost has went up so much, and there's just no starter homes really being built in our county, very non-existent. And so we've got a big void there, and I think this is a stretch. Also, the vacant lots, I heard from a group, they're like north, west of the state. It's 26 counties. They said they got 1,500 lots just in them 26 counties that the vacant lot program would be, really work. And you got to remember, there's water in front of them lots, there's, gas, there's all the necessities to build on them lots and have them, a cheaper house or affordable house in them rural communities. So that's what this bill's about. Thanks. Thanks, Mark.
Senator Gossage.
Forgive me for having to be late to committee, Mr. Chair, and so this may have already been addressed. What I'm trying to understand is we know we have builders in our state, and if there is a need for housing, why do we need additional incentives and tools? Why aren't they just building homes?
I think particularly in the affordable segment, I was talking earlier about it being a math problem, and the cost of all aspects of home construction are increasing so dramatically that it is very difficult to buy a house and be able to sell it at a price to get that value out of it. And so there are a need for incentives, particularly for more affordable housing, to make it happen. I think that it's, again, that math problem working out. And the math is troublesome when you're talking about affordable and smaller properties.
So if I may, Mr. Chair, so if you have this math problem, how exactly is the math problem solved? So you have a house, you're trying to sell for a lower price than it actually costs to build it. How's the math problem solved?
What this is, it layers on. It also is using, in particular, the expansion for vertical infrastructure in more rural communities. That part of the bill will be using existing infrastructure. So you're saving money by layering it on with the infrastructure that's already there. There's also the incentive for the builder is in the payback, and I think that there are others here that have used the tool that can probably talk a little bit about how the payback for RHID for a vertical infrastructure would work, but it is essentially going into the overall cost of construction, and it will lower the cost for the end consumer.
When you say vertical construction, I'm assuming that you mean you have a one-story home and you're going to add stories to this house? Can you explain to me what
Well, it'd be a vacant lot, vertical, anything from the ground up.
which would be any home?
Could be any home, yes.
Okay. So then,
There's been previous incarnations of RHID that focused on upper floor residential above a commercial space. That was the expansion done recently, but it would be for residential on the second floor. That's why I use that term vertical, so it's full construction.
so in any math problem, my last question, Mr. Chair, in any math problem, in solving that math problem, where is the money coming from that the house is costing more than the sell price so that a person could afford it? Who's making up the difference in price?
It would be an incentive that would be funded through tax credit, or not tax credit, but the RHID, so it would be the property tax that would be paid to pay for the RHID development.
The property tax? So
Basically on the increment. The increase in value is paying for the incentive.
all right, thank you.
Senator Olson, shortly, please. We need to move on to 37.
I'm sorry. A lot of it is, when you go to borrow money from the bank, the profit margins on building the smaller houses are so much narrower. And when you use the RHID, yeah, you're giving a piece of it back, but without these starter homes, you're not going to have people to work in these bottom-end jobs. And so you're giving a piece of it back to build infrastructure, help reduce, make that profit margin incentivable, so they want to build them houses. Because when you're going to borrow the money, you're supposed to borrow $750,000 if you're going to make 10, 12, 15%, or do you want to borrow $275,000 and make 4%? What if you get stuck with that house? And so these incentives will help build them smaller houses.
Mark, thank you very much. Let me call your attention to 12 pieces of written-only testimony. We have no other proponents. Do we have any opponents to the bill? Anyone that wishes to testify neutral? I see none. Senator Warren?
Thank you, Mr. Chair. Don't wish to testify. Just I'm noting I had hoped that some of the representatives from the 7 cities who would be qualified should this bill pass would have been oral proponents as well. So
I would have thought so, but they weren't on the list.
thank you, Mr. Chair.
Okay, we will close the hearing on Senate Bill 34. We will now turn our attention to Senate Bill 37. Eileen?
Thank you, Mr. Chair and members of the committee. Senate Bill 37 would expand the transferability of tax credits issued under the Kansas Housing Investor Tax Credit Act. Enacted in 2022, the act allows taxpayers who invest in or develop housing projects in Kansas to apply to the Director of Housing for the Kansas Housing Resources Corporation. If approved by the director, the investor can receive a tax credit for each residential unit developed up to 40 units per year. The residential units can be single or multifamily units. The amount of the tax credit issued is for the cash investment in the project, subject to statutory limitations, depending on the population of the area where the housing project is located. In counties with a population of not more than 8,000, the tax credit cannot exceed $35,000 per unit. In counties with a population of more than 8,000 persons, but not more than 25,000 persons, the tax credit cannot exceed $32,000 per unit. And in all other counties, the tax credit cannot exceed $30,000 per unit. Under the Act, if the taxpayer were issued a tax credit and did not have any tax liability against which the credit could be applied, the taxpayer could transfer the full amount of the tax credit to another taxpayer. Additionally, any transferee receiving a transferred tax credit, whether all or a portion of such, could make a subsequent transfer of all or a portion of the amount subject to the amount received to another taxpayer. Senate Bill 37 would maintain the current requirement that the tax credit must be claimed within the first 5 years after it's issued. And if enacted, Senate Bill 37 would become effective on July 1 of this year. And I can stand for questions, Mr. Chair.
Thank you. Committee, are there questions?
Yes.
Senator Olson.
That's current law. The only thing this bill does, it allows the tax credit to be sold one more time. Is that correct?
I would not consider it, so just transferred. You don't, a tax credit isn't sold?
We passed that last year in the housing bill.
Right. This bill allows the transfer of a tax credit.
Yeah. And it's
Further on, subject to the 45-year limitation.
Yeah, it's basically where the problem was when we did the bill, we didn't see where, say, UMB or Commerce has a holding company that buys the tax credit for someone. They couldn't sell it to their individual that they were buying it for.
Okay. Thank you, Eileen. Our first proponent is Senator Rob Olson.
Thank you, Mr. Chairman Longbine and Vice Chairman Fagg and Minority Pittman. This bill really just does one thing. Yeah, that's how we used to do it in the old days. When we passed the bill last year, most of what we just heard was already, it's current law because it passed last year in the housing bill. What we didn't see, the problem that come up was, there's a lot of these banks, they buy the tax credit, they have a trust department, and that they're managing someone's finances, and they're buying the tax credit for them. So they would be able to legally buy this tax credit, but they couldn't sell it to their client because they need to be able to sell it one more time. That's basically my understanding. What we need to do is be able to allow them to be able to sell the tax credit one more time to the people they represent. And that's what this bill is supposed to do. And that's when I worked with Jason Long. And also, I was told a couple days ago there might be an amendment to allow out-of-state insurance companies to be able to buy these tax credits. I have no problem with that. The more people we got playing, it helps get more tax credit back to the individuals. And I'll stand for question.
Thank you, Senator Olson. As I understand it, there's a couple of challenges. Number one is that in the legislation that we passed year, it allowed for the transfer one time. So then it goes into a bank security portfolio and it's stuck. And so at times banks need those securities in their portfolio to be transferable. And so this fixes that. The other problem that I think we've discovered is that there are some developers who have larger tax credits than what their local financial institutions may be willing to purchase. And so that has then caused only the largest banks in Kansas to want to buy the tax credits, and they are trying to buy them at a large discount. And so this transferability, making these transferable will increase the value of the tax credit, but also allow them to be sold on the more of an open market type situation. So, am I correct?
I think so, yeah.
Very good. Any other additional questions for Senator Olson? Senator Pittman.
Thank you, Mr. Chair. I was just wondering if anybody knows what these tax credits are, what's the percentage that they're going for now?
I have a feeling someone later will probably be able to answer it over Department of Housing. I heard they're going pretty good, but I don't know. I mean, I think with this piece, they'll really be able to sell and be more competition.
Yep, all right.
Thank you.
Ross Vogel with Heartland Housing Partners is next. Welcome again, Ross.
Thank you, Chairman Longbine. We don't exactly know because the first round hasn't come out, but it looks like it's going to be north of 90 cents on the dollar, or somewhere around 90 cents on the dollar. A lot of times it's a friendly bank that might be the lender on the project anyway. This is Senate Bill 2237 has been extremely successful, and I'll go anecdotally to a story about Senator Longbine, constituent of Senator Longbine, done a ton of development in Emporia, built apartment units all over the place. We've been on the sidelines for 4 or 5 years because you simply can't make the economics work. And because of the passage of this tax credit, he's jumped back in, and we're seeing great activity in Emporia. And it probably goes to your question, Senator Gossage, is the economics just didn't work, and they weren't going to work for rentals and affordable or attainable price housing. Through that incentive, they made the economics work, and I think, as the KHRC will attest, there are going to be a ton of applications for these tax credits because, once again, the market's working, and that's what we're asking to do. Simply stated, this increases the value of the tax credit, increases the interest. One more thing this does, we didn't mention, there's another little glitch that said you had to have you couldn't have it. If you had a tax liability, you couldn't transfer that tax credit. This also removes that, which gives a little more freedom to the developer or builder to sell those tax credit. Great program, going very, very well. This just increases the value of that tax credit.
Ross, thank you. Committee, are there questions? See none. Thank you. Allie Devine, you're back up.
Thank you, Mr. Chairman, members of the committee. In case you haven't figured this out yet, my role in all of this is to keep people moving through the system. So over the last year, we had worked with a coalition of 20 entities, and some of whom are in the room today, including some of the prior speakers, but Scott Sproul from the Northwest Economic Innovation Center is here too, who may be able to answer more of your questions. The number one thing about incentives, in particular the tax credits, it really got some of our rural lenders excited about coming into the market and funding things. We needed to draw developers back to rural areas and build houses, and we think these things are starting to make it work. So, Mr. Chairman, we support it, and I think other people can speak to the details better than I. Thank you.
Thank you, Ally. Next, we have Brad Smoot on behalf of American Property Casualty Insurance Association. Welcome, Brad.
Thank you, Mr. Chairman. It's a pleasure to be back in front of this committee again.
Pleasure to have you. It's been a while.
Thank you. It has been too long. I'm here on behalf of the American Insurance Property and Casualty Insurance Association. We're the largest P&C trade association around the country and write about $4.2 billion worth of P&C. As you all know, that includes coverages for businesses, homes, auto, workers' comp, and the like. We're happy to support Senate Bill 37. We have discovered in it, in the current law as well, something that we probably should have caught last time around, and that is dealing with premium taxes. Insurance industry is kind of unique. We have a mechanism known as retaliatory taxes. It's a way in which insurance companies from one state and another state have their tax rates equalized. Some states have 1% premium tax. Kansas has a 2%. Other states have higher tax rates, and then they have all kinds of changes or variations that could take place, like tax credits that adjust what you might owe. Well, the states tend to work those things out through this mechanism of the retaliatory taxes. If we don't provide some kind of relief from that, there's no incentive for the insurance companies from states that have higher taxes to invest in Kansas housing market. And we think that this is a way that could be easily fixed. As I say, we should have caught it last year. We didn't. We're trying to catch it this year. I have included in my testimony the one sentence that you would want. It's near the end in italics. We use that in other tax credit statutes currently. That's taken from 4252 D and E and 4253E. And so it's certainly nothing new, but it is a way in which we can get more interest from the insurance industry in supporting the housing market in Kansas. With that, Mr. Chairman, I'm happy to respond to questions.
All right, thank you very much. Committee, are there questions? I know very well how you know how this works, so I've got intentions on working this bill on Tuesday. So if you can get a balloon and a sponsor, that'd be great.
I'd be happy to talk to your revisor about the balloon.
All right, thank you very much. Committee, let me call your attention to 5 other pieces of written-only testimony. There is one piece of written-only opponent testimony from Michael Austin with the Americans for Prosperity, and there is one piece of oral neutral written testimony. I'm sorry. Ryan Vincent is going to speak from the Kansas Housing Resources Corporation. Thank you. Welcome.
Good morning, Mr. Chairman, members of the committee. Good to see you all again. I know that last year we were working with Senator Olson and a number of you on what ended up being the most historic investment in housing in our state's history. I serve as Executive Director of Kansas Housing Resources Corporation, or KHRC. I've been in that role going on 18, 19 years now. We have seen an increased investment and awareness of the connections between economic development and housing, between healthcare and housing, between jobs and housing, between schools and housing. Housing is a key determinant of so many positive things for our neighborhoods and our society and our family and our state. And that's why Kansas Housing is pleased to be administering all of these new resources that you've charged us with. I've got my team from KHRC that's been involved behind the scenes, making sure that these new resources are being rolled out in coordination with the great stakeholders you've heard from today. I do want to make sure I remind the committee that we did go through a year-long statewide housing needs assessment, which was released last December, December 21. It's on our website. It's comprehensive. It was the first statewide housing study in 30 years that captured all of the different needs in rural and urban areas alike. It talks about why there's that gap that the senator was mentioning and some of the different recommendations on how to close that gap. Some of those recommendations were things like increased investment in workforce housing. These are the folks that make too much money to qualify for the affordable housing programs that we administer at our office, but they don't make enough to actually make the rent or build new homes. That's why Senator Olson and a number of you all have been working with us on these new investment opportunities. One of these is this new Kansas Investor Tax Credit. That program, along with the new and expanded moderate income housing program, has already made one announcement of awards in December. We've got a second round that will be coming to us here in the next couple weeks. I'm pleased to see that we've already seen a dramatic increase in the number of applications for both the MIH, the moderate income housing, and the KHITC tax credit program. A couple things I just want to make sure that you all are aware of. We did submit testimony that we had actually submitted to, I believe it's the Senate Commerce Committee, as well as the House Committee on Commerce, that just gives an update on where we're at with the new moderate income housing and KHITC awards. It gives some specific examples of the new housing that we're developing, we're building for your communities, for your jobs. These new resources are working. Even though housing development takes time, we are getting new developers to apply for our programs. We're hearing stories of developers moving from out of state to come work in our state, as well as homegrown developers and builders expanding their capacity. I do want to make sure that you're also aware that there is an administrative component of these transfers. We're very supportive of anything that's going to increase the pricing for the credit, because obviously that's going to increase the equity to close that gap that the senator mentioned. However, there is an administrative aspect for KHRC and the Department of Revenue in approving these transfers. So, we're not policymakers, just want you to be aware of that administrative aspect. And if you deem to maybe put a limit on the number of transfers, that might address the administrative aspect of it. But other than that, we're very pleased to provide you an update whenever you'd like it on this program, on the moderate income housing program, and any others. I'm happy to stand for questions, Mr. Chairman.
Thank you very much. Committee, are there questions? Senator Pittman and then Senator Gossage.
Thank you, Ryan, for the testimony. Thanks for your work for helping get our housing shortage needs met with your studies and such. I'm very supportive of both of these programs, but on the opposite side, I do have people who tell me, no matter how many credits we give to developers, sometimes they'll just pocket the money and keep the prices of the houses high. In your experience, does that happen, and are there ways to prevent somebody just from pocketing that money and still just making double, triple, or even more from these credits that maybe they could have made before? So it's a concern that folks have expressed to me.
It's a fair concern, Senator, and I appreciate you bringing it up. KHRC, one of the benefits of fielding more and more applications is we're able to determine what's reasonable. We're able to compare them against other applications. We've got metrics that are being used within our state as well as compared to other adjacent, similarly situated states. We've got a wonderful development team that's very aware of general costs, the rate of inflation. Certainly developers need to make money in order to be able to run a business, to be able to develop, and for us to be able to get homes built. So it's a public-private partnership, which means that not only is the government involved to make sure that ultimately the housing's built, it's serving those that it's intended to serve, and that the costs are being used well so that we're good stewards of government funds. But the private sector is also watching to make sure that that housing is built. In the affordable housing tax credit, that's for a period of 30 years. So you've got that public-private partnership that's ensuring the houses are built well and that they're in compliance, which is ultimately good for the residents of the home as well as the neighborhood that it's going to be built in for the long term. Because ultimately we know that we're going to be long-term neighbors with these investments. So we are aware of that. We're watching it, and we also make sure that we are working with the Kansas Housing Association and the developer network so that they can I guess, maybe police their own as well. So it's definitely a team effort.
Senator Gossage?
Thank you, Mr. Chair. I just want the conferees to know that my questions are due to my ignorance in this issue. And so I feel like to inform me as well as other listeners that are on WebEx that have not worked in this. I was a real estate broker for about 10 years, many years ago. So know the real estate side, but not the financing side. So it was a shock to me and a surprise that there are such things as transferable tax credits. Do you know of any other tax credits that are transferable?
Great question, Senator. And I can only speak for housing programs because that's the world I live in. But the housing tax credit program has actually been around since the Reagan administration. We get tax credits from the Department of Revenue every year. We allocate those tax credits to developers through a competitive process. Those developers then sell the tax credits to insurance companies and to banks and to private investors. That funds the equity to close that gap. Ultimately, for our affordable housing tax credit program, we're able to finance about 2/3 of the development cost. And in return, those developers are committing that for 30 years that they're going to charge below market rate, that they're going to serve very low income tenants, that they're going to keep the property in good compliance. Again, that program has historic bipartisan public-private support. It's been proven to be probably the most effective program for getting affordable housing developed in our country. Every community in Kansas has enjoyed this housing. We've got it right down the street in Topeka. We also have it in some of our smallest rural communities. These types of programs work because, again, you're getting multiple sets of perspectives and ideas. And ultimately, the more people that you have involved in getting the housing built, the more support you get from the community, from the neighborhood, and from the people who are enjoying that home for years to come.
So my final question, Mr. Chair, is I don't see fiscal notes on either of these that there would be a effect on the state's general fund. So I'm trying to understand, I guess what we're saying is there wouldn't be more tax credits. It would just be transferred and there would be some that wouldn't be used. Do I understand that correctly?
That's correct for this particular bill with the Kansas Housing Investor Tax Credit. The only effect might be some additional administrative burden on either KHRC or the Department of Revenue. KHRC may be able to offset that just through a small fee that we charge to approve each transfer. I can't speak for the Rural Housing Incentive District bill, but that's actually approved through the Department of Commerce, and they may be able to provide some insight on that.
Thank you for your explanation. Thank you, Mr. Chair.
Thank you, Senator.
Senator Olson, quickly, we're out of time.
Sorry. Okay, I'll just leave it at that. Ryan answered everything. Well, one question, Ryan. What's the smallest community that we approved for the investor credit? And, you know, the problem with a lot of these bills, federal, state, they only go to places like Salina, McPherson, the bigger cities. But tell me, the investor credit, what is the smallest? And how many
senators? So I've actually got a list that we could be happy to provide the committee. We've got Ellenwood, we've got Hoxie, we've got Carbondale, we've got Emporia, we've got Montezuma. I mean, these are some, of course, Emporia is a larger one, but the rest of those are pretty small communities.
What you're going to see with investor credit, you're going to see them smallest of communities growing. The real answer will be in 2 or 3 years when this really gets going. You'll see instead of only a handful of counties growing in this state, all across the state, it'll be growing. And it'll be growing property tax revenue for every little city and every little school district. So just think of this money, you're giving a little bit to the school district.
Ryan, thank you.
Thank you, Mr. Chairman.
Senator Gossage, there should be a fiscal note in your packet on 37. If there's not, I apologize. $42,780 is the total fiscal note, and there is not a fiscal note on 34. There is, but it has no fiscal effect on 34. Okay. Committee, that completes our work for today. Tomorrow we will have a bill on credit card surcharges that seems to be drawing a lot of interest. So if you can be on time, I think we'll have a lot of testimony that we'll need to get through tomorrow. We are